Monday, February 10th, market analysis, Stan Ehrlich. Good morning. 9:56 California time. Just a little bit after the middle of the trading day in California. It's 6:30 to 1 o'clock for the traditional stock market hours, and everything else is whatever. So let's get started with the E-mini. I always start out with the stock market indexes. And we have a fairly modest rally today, adequate, not great, no particular signals. And in general, the market has been going somewhat sideways for a little bit. You can see here on the daily data chart on the E-mini, the ES, that we were higher than today's high on Friday and Thursday, and about the same on Wednesday of last week, and a little bit lower on Monday and Tuesday. And even the week before that, we're still in the same approximate sideways trading range now for about 2 weeks. Yeah, we had a rally, came up, closed a gap, didn't make a new high for any significant period of time other than about a week. And it went down and made a new low for about 2.5 weeks, but it didn't stay there and pop right back up again. That was the beginning of last week. So we're a little bit between a rock and a hard spot. Do we have a double top? Well, we haven't broken out of it to the downside, which would be closing below 58.09, give or take a little. Then we'll have a significant downside move of a chunky amount of points down to 54.43-ish, not necessarily changing the long-term trend. So I'm not really bearish, but I am looking for a correction larger than we have had so far, at least down to the 58.50, 58 ballpark support area that has been tested now a few times since October. And on the way up, the same at the time resistance area tested in July and bumping up against it from below in August. So it's pretty profound. Then again, that's 58.50 to 58 or so hundred. Getting below 5,800 is a totally different story. The floor gave way and new lows for quite a while and a downside breakout. But between now and then, we've got to watch for reversals, rally failures, resistance areas stopping rallies, support giving way, previous lows not holding, et cetera, et cetera, et cetera. Next chart is simply the 1 minute chart on the E-mini. We're going sideways. Hey, we might even have a minor little tiny head and shoulder top right now. The last shoulder high looks to be exactly the right price. Good timing, slightly upward slanted neckline. Yeah, I know it's only a matter of about 3-4 hours worth, but still, I've seen them a lot smaller, 5-10 minutes on a 1 minute chart. Rare. They don't last long, of course. Teeny weeny chart formation, to say the least. But I've also seen them last 10 years. Dollar index, way back in the 80s, I believe. And it did take a couple of years for it to work. All right. So maybe a last shoulder here. Well, in a matter of minutes, maybe 15, 30, we'll find out. Keeps going up, pattern's no good. Goes sideways, pattern's pretty much no good. It should basically turn around now and head south. Next. Oh, by the way, and the minimum downside objective on this is not that big a deal, but it would put the market down to, I don't know, approximately 60-50, somewhere in there. Yeah, another 3 full points lower on the day, lower than the current quote, which would be back down to approximately unchanged. Okay, spider. Almost all of what I said applies, but the spider had a bearish engulfing on Friday. The only reason why it wasn't red and an official sell signal is because it was not overbought within the allotted number of past days. We did get overbought back there on January 23, 24. It did top out. It did top out around the previous historic highs after making a new high, but for about a day and a half and then completely failed. So major resistance, double top, were just simply not too far away from that resistance again. And by the way, if these markets do start to make new highs for the last few weeks, let's call it a month or two, especially above the high back in December, late November, December, that would be quite bullish. I'm just simply not expecting that. I think we've got more downside potential. And the spider 1 minute chart has maybe a little toppy formation for the moment. Let's go to the QQQ. This head and shoulder top is getting worn out. We've gone sideways more than what would be normally expected. The only hope momentarily is the bearish engulfing on Friday. We have rallied back up to the middle or higher of the range of Friday, which is not abnormal whatsoever. That actually provides, at that approximate price level, when you have the other criteria fulfilled, opportunity for a new short, ER3s, scalps and overnights. But ER1 gets into the trade the day of the signal, and there was no signal on Friday, simply the bearish engulfing, not overbought within the allotted number of past days. So you get part of my strategy, not all of it. That's why it didn't turn red. So I like what I saw, and I still think it could cause it to make lows lower than Friday's lows real soon. And that could even be today. It just doesn't look like it at the moment, except for that little bearish pattern. Now, QQQ 1 minute. Yeah, I said it already. So we're up near the high in the NASDAQ. All the previous commentary basically applies. Head and shoulder top is getting a little tiresome. It's taking more time on the right side than normal. After the last shoulder high, usually it does exactly what it did the next day, start to move lower, not necessarily that fast, but then break out to the downside shortly after that. And it's been 2 full weeks. That's not normal. And the 1 minute chart. Okay, YM, double top potential, an official ER red sell signal on January 31st. Nothing wrong with this so far. Today we did make new lows for the last 4 previous days, almost making new lows for the past 2 or 3 weeks. So the YM really is starting to move down more quickly than the others, and it might pull everything down with it. Maybe it's leading the way, but this chart formation at the moment seems to be doing adequately well. We're just simply higher on the day momentarily by a minor amount. So let's see if it can come down or not. That's what I'm looking for. And the 1 minute chart has already made new lows since, last evening, 4 or 5 o'clock p.m. Sunday afternoon. And we've got the Russell, which is a different animal. It did go up last week and test the same resistance area that it's been testing several times in the last 3 or 4 weeks or so. Stopped cold, dropped down on Thursday of last week, more on Friday, and this morning a chunk more, but we're in a little rally at the moment, slightly higher on the day. No reversals, nothing else I can really say here except a close above these recent in the last 2 or 3 weeks, above those highs on a closing basis would be very friendly. I don't want to use the word bullish because we are in a major historical resistance area, but there'll probably be more rally. On the other hand, I could say about the same thing on the downside. Making new lows for the last couple of months should drive it down further, but we're still in a huge area of support. So you're between a rock, a big one, and a hard spot, very hard, and back and forth, back and forth. Okay, here's the 1 minute chart. Not telling me much. Okay, bonds had a bearish engulfing on Friday. Outside down day, did not come up to my new short sale signal price for an ER3 trade. We are short from the signal on Friday. There is a minor little green line right there. Let's expand so you can see this better. And I put a handle on it, and there it is right there. So I like what I see so far. And there it goes, only halfway. So the long position we had, okay, we have a little problem. You can't be short from a signal on Friday and also long from a low that we bought it on January 15th at the low of the day, the exact tick low on the opening, 110.30. We bought it on January 15th, the day after the bullish engulfing bottom of the market buy signal, my ER signals. So the long position from that date is the primary, and we'll have to fix this. We can't go short when we're long, and we don't get out of a position point blank until we get stopped out, and we're not stopped out. So there was a sell signal true, and if you had not been in a position, a long position, then you might have considered taking the strategy new short from Friday when it happened. But since the strategy says we're long from, again, the 15th of, what was that, January, we ignore the new sell signal because we're still long. Now, if we get stopped out today or in the next couple of days, that'll be it. We're just going to go flat. And the new short signal from Friday is being ignored. So we gotta fix that. Okay, next. July, I'm sorry, notes, March 10-year notes is sitting again like the low of Friday, right on the neckline, excuse me, of this head and shoulder bottom formation, which is giving me headaches. Normally, it doesn't mess around with the neckline going a little above, a little below, a little above, a little below. For a whole week, usually doesn't do that. You get above the neckline, all of a sudden it's supposed to pop up strongly, come back maybe halfway to all the way back to the old neckline, and move up into new high ground. Well, clearly it closed above the neckline again on the 4th of February, Tuesday of last week. Wednesday of last week, it followed through. New highs, strong up day, high volume, I'm sure, looking good. And by the way, I hardly ever mention volume. I'm not much of a volume follower, but I can tell you when it's high and low because of the way it acts. But it doesn't do much good for me in my type of analysis. Next day, Thursday last week, inside doji, little slip, and then came back to the neckline to test it on Friday. Fine, good, normal. Doing it again today? Well, acceptable, not violating any rules, but it should normally, typically start to rally strongly ASAP today, tomorrow, certainly real soon. I would definitely expect it to be this week. Next, we've got crude oil, and we got oversold, and we got the market turning back up. Not a surprise. So what now? Well, this could have been a significant low. There's not too much else to correlate here. I don't see any particular profoundly accurate support or resistance. Just the fact that it got oversold, turned it up, which is typical. Is it going to hold? I can't really tell. 70.40, is it going to hold? Don't know for sure. But I'm inclined to say it's going to rally some more. Next, heating oil. Pretty much the same story. Support is holding it. Rallied, minor new high for a few days. Trend could be turning up longer term. Let's see how much strength we can follow through with. No particular signals. Don't feel good about being very profoundly making some kind of ultimatum, in other words. I think and a low level of expectation that we're going to rally. And the same kind of commentary going for natural gas here. And again, this is giving me headaches. This head and shoulder top broke out classically and dropped like a rock, bottomed out, not quite oversold, but that's okay. Popped back to the neckline. Again, that was a week ago. Started to come down and close a gap, didn't finish that job. Turnaround and is now Thursday of last week, Friday, and today pushing into minor new high ground. In fact, it's now back up to the same levels that the last shoulder was at, but it's below the neckline, which is upward slanted quite a bit. Now, I mentioned when it happened, the neckline was calculated that was fairly sharply upward slanted, and I was a little uncomfortable with it. But up until approximately the last couple of days, and that would be including the bullish engulfing, see? It did drive it higher. The next day, a little pullback, and now a third day after the bullish engulfing, you get more strength. I love those reversals. It's just that I don't trust every one of them. It depends upon the circumstances, where and when they happen. This one didn't look like it was really going to work very well, if at all, but so far, so good. In fact, pretty good. I don't know. Maybe this head and shoulder top is no good anymore. I'm inclined to start rolling in that direction, and I'll have to remove the neckline, the downside objective, the little rice paddy hats. I wish I knew the exact name of that. But anyway, markers, the embellishments here for the shoulders and the head. We'll see what happens. Next is the gold. Very, very overbought now at 80. Still chewing its way straight up and getting stronger quicker. Now, this kind of activity can start to bleed into something we call a blow-off top, which is extremely difficult to measure how much higher you're going to go. But I can tell you that they last a very short, therefore a blow-off top, a very short amount of time, usually 1 or 2 days, not weeks, usually. So here we are getting closer and closer to my first upside objective because of the vertical height of the back of the pennant formation that we broke out of classically. And then we have another objective because if you measure the beginning of the staff or the flagpole of the pennant, then you have come up with this upside objective. So the highest one is 31.18 when the slightly lower one is 29.90, let's call it. And here we are at 29.31. So not too far away. Maybe we'll get there super fast and get more overbought. We're at 80. And then I'm going to scream bloody murder that it's probably going to turn down. Right now, I'm expecting it any moment, any day. Could be more strength in the meantime. Silver can't make a new high, stalling out, lower on the, well, basically unchanged. It's up a tick now on the day. And in a resistance area, not quite overbought, did get there. So if gold tops out, which I expect real soon, then silver, I think, is likely to go down real quick with the gold. So I'm a little bearish on silver, but it just won't start dropping. Maybe because the gold is holding it up. Not sure. And platinum. We have an outside up day today, nowhere near oversold, so I'm not getting a signal. And unfortunately, it did kill the bearish engulfing that we had on Friday, so that did not work. Also, it's jeopardizing the signal that we got on February 3rd. So far, that one was not particularly great. We did make a really good ER1 scalp day trade. And the overnight trade could have done very well too. And I don't have either one of them on the screen, but you can tell from the distance from the low of the previous day to the low of the signal day, it's very substantial. And that allows for a lot of elbow room to make some money from that particular signal. Okay. I think this is going to stop going up and roll over and turn down. Resistance, mostly. Next. High-grade copper, kind of like gold, very overbought, kind of in a no man's land, coming up close to previous very profound and worked great sell signals. I think it's on the verge of turning down, which is the same kind of commentary I made on gold. Next, soybeans, soybean oil, meal, corn, wheat, cattle, hogs, and then a stock, XYZ. Now, long-term bottom in grains, I'm still talking about that. We almost made an upside breakout from a double bottom formation. First lows were approximately August. Second low was specifically on December 19th. And we came all the way up to the highest high between those two lows and just stopped about 2 cents shy of a major upside breakout that should put the market up to 1187 if the formation double bottom works correctly. But we've now got a little pullback. Not a lot, no damage done. I could easily justify 1031 on a little bit more of a dip and then turn up, or it might dribble off to about 1015 and turn up. I really doubt it's going to get much lower than 1015, but the fail-safe here is certainly staying above 978. So I don't think it's going to go down that much. At the most around 1015 and maybe not even that far. Soybean oil has a potential broad head and shoulder bottom. So far it's working okay, but we haven't got a breakout. The market made its last shoulder, rushed up very nicely, and now has gotten lockjaw sideways. No higher high of any significance, and it didn't stay there. No lower low at all. And we're in the same range now for about a month. So, yeah, when do we get up there? Yeah, it's the 10th of January, exactly. The 10th of February today, 1 month. So we got to break out to the upside to perpetuate the upside move. And the longer you go sideways, and I kind of use the word energy to explain when markets go sideways, they are developing a lot of trending potential once they finally break out. Until then, it's just developing more and more potential. I vote higher. Next, soybean meal is the same damn thing. Major support, triple bottom, not a head and shoulder. And that's still three lows. And big sideways trading range at support just doesn't seem to get its ass in gear and start to rally here. I just need to see it close obviously above 315, then 319, and then the upside breakout sort of is going to be above 322. We've got a neckline. Well, I'm sorry, that's not a neckline. We've got a major bear trend line, kind of similar, on these three lows. Let's see what happens. I vote higher. Corn already had a head and shoulder, already went up to its minimum objective, already fulfilled its obligations, so to speak, and already has had a little bit of a dip. Support, not oversold, but support held, and made a new high for the move, but resistance stopped the rally. We got no follow through, and it stopped at resistance. So we backed up for a couple of days. I think corn is about to make a new high. It has already developed some decent momentum on an intermediate to longer term basis and is looking awful good. I do think it's going to challenge 513.14 and have another major barrier overcome in this fledgling longer term bull move. Yeah, getting above 513 is probably going to push it up as high as 560, 70, 80. Next, double bottom and meal. I meant wheat, sorry, soybean meal. Damn it, wheat. And did get a new high on Friday, but got overbought. So I expected a dip, and we got one today. Not too many other indications that it was going to dip, except the overbought condition. I don't think it's going to go down much. I think it's going to turn around this week, could even be today, anytime, and make some new highs. The double bottom breakout is going to occur in a resistance area, which is around 635, 636. When we get to 636 on a closing basis or higher, the double bottom upside objective kicks in. Then you get 737 out of it or more. Next, cattle. Overbought, topped the market out. Bearish engulfing worked out very adequately. Not super good so far. Came up 2 days later after the signal. We got an ER3 short. It went down the next day. Great, big time, excellent. New short, and the positions trade for ER3 is still very profitable. And on a bounce, no less, I think it's going to make new lows easily this week and keep on coming down probably to 192. And we got Miss Piggy, hogs. We have an outside trading range, bearish or bullish engulfing right now. It is apparently just about unchanged. Give or take a tick, it looks like it's down just a tiny, tiny bit here, a couple of ticks. That's a bearish engulfing, but we're not overbought within the allotted number of past days. Yep, it's 1 day too many, so it's not red. If we had gotten overbought just a 1 day less amount of back time, we would have a bearish engulfing red sell signal. So this is very, very close to fulfilling my strict rules about the strategy. So I'm thinking this could be bearish. Yep. Okay, we'll see what happens on this piggy, but if we close lower today, the lower the better. I think we could have a downturn today. If it closes higher, different story. Outside up day, after testing huge support, probably going to pop up even more, but it totally depends at this point on the higher or lower close. Next, XYZ, the stock, holding okay, but the head and shoulder, but the double shoulder, head and shoulder bottom I started outlining last week is now starting to look bad. I didn't want a lower low. We got one just a tiny bit on Thursday. Okay, closed unchanged. We made a lower low by a little tiny bit on Friday, but it closed poorly. And today we're making another lower low by a modest amount, not a tiny, tiny bit. And it is still lower on the day. This shoulder is not holding. Is it creating a slightly lower shoulder? There is that chance. But about the last chance I've got for this to be a last shoulder that will be a little bit more to the right than I was expecting, probably a couple of days. And that's it. I got to have a steady to higher move basically for the rest of the week. And otherwise it's going to be a bad pattern and I will erase these annotations. Back to the E-mini. Looks like it coming up a little bit. Yep. Talked about a last shoulder high. Still maybe a little higher than I would have guessed, but not ruining the possibility. And just so you are aware, this is the shoulder over here. That's the head right there. And we could have made the last shoulder high in the last 15, 30 minutes. Looks like it's quite plausible. All we got to do is start coming down here. The only three things it can do is go up, sideways, and down, and I guarantee you it ain't going to go sideways very long. So now you're left with up or down. I think down. That's it. You guys have a great day and profitable trading to you.